Good morning and welcome to Markets Now. I'm Michelle Berg with Brad Kooima with Kooima Kooima Varilek. We're seeing a little strength over in the livestock complex this morning, kind of quietly mixed in the grains. And Brad, nice to see the board up here after a little profit taking on Friday, it looked like, but certainly an impressive week of cash last week. And what are you expecting this week?
Thanks for having me on, Michelle. I think it's correct to point out how last week I thought was dominated by the cash, and as an old dinosaur fundamentalist, that kind of makes me smile because some of us still work pretty hard at trying to figure out what some of these fundamentals are. Some of the cues, I guess, last week were when you have a packer that is buying cattle for supposedly 2 weeks out and then suddenly calls the next day and needs them that night. I think that was a strong indication. I think more of these packers are getting closer to the knife. They do not have the kind of inventory, most of them anyway, that they would like us to believe they do. And taking a look at last week's kill of 617,000, the bears will say, "Oh no, we're backing up cattle." Those of us that are up here in the heart of the farmer-fed belt would tell you that is absolutely not what's happening. We are very current, more current than most Octobers. I think it's a function that this is how many cattle there are. And that means there's hardly enough to go around. So if the packer wants to pick up the kill a little this week, to answer your second question, what's cash going to do this week, which they tell me they're going to try to kill a few more this week. I don't know how they're going to get that done without having to pay up a little bit. So I think cash will be, at the very least, steady. And I think probably be a little bit higher, at least on kind that'll grade.
Yeah, and those choice boxes, man, every time we get below $300, they seem to find some big buying interest. And so do you think we're going to continue to see that, especially as we get into this holiday buying?
I do. I think last week's kill will help that too, Michelle.
Yeah.
There'll be less product offered through the system, and I would guess that would help support the boxes. Now, some of this is anecdotal, I guess, or I don't know if that's the right word, but some of this is a bit hearsay. But when beef is traded more than just on a daily basis. There's people that buy beef for next week, for next month, for 3 months. And my understanding of the beef business on that forward pricing type structure has been very strong going into the holiday period. So I know, how can you not be observant of current events, right? And what's going on worldwide. And of course, if that escalates, that could be a huge factor. But right. To judge demand right now, it appears like it is extremely good, both domestically and globally still.
So let's hone in on that, because I wanted to ask you that question this morning. We've had a lot of market noise. The market has handled it quite well. Can it keep handling that? And what would spook the funds enough to roll over here? I know they've exited some longs.
Well, yeah, roll over or just be absent.
Right.
The long speculator. And I understand that. I mean, I've gone through all that stuff, right? I was here in September 11 and mad cow and fires and COVIDs and all that stuff. When you chase the long speculator, and cattle are first in line for all that stuff. So there's a reason why I've got the S&P daily contract right up. I mean the chart right up here on my right. It's higher this morning, by the way. I don't know. I would say that it looks like, I think the market is looking at the situation in the Middle East is that if it stays contained to that, if it doesn't escalate to more terror, more places, particularly U.S., if they can contain it to that and get some resolution here, I'm going to say quicker rather than later, but I don't know what that exactly looks like. It looks like maybe the market is going to be able to weather it. Now, I say that, and it's obviously, use your head here, folks. You've got extreme risk with what we've paid for feeder cattle. Put options are not something for just the Cub Scouts. This would be a time to me where you double down on some of this risk management like that, and try to let the market reward you with upside potential still, but let's not get caught here in a some sort of black swan event again, like we've experienced several of them, right?
No doubt. Hog market. We had lower weekly closes last week. Cash and cutouts have been pushing lower here, but you did have October go off the board. Now you've got a big discount here. What does the market do with this?
I remember an old timer when I started told me about hogs. He said, you got to sell discounts and buy premiums.
Gotcha.
I've repeated that phrase a lot. Market is smarter than what most of us think. Guess what? The guy that's short December hogs does actually know what cash hogs are, I would guess. I've been kind of negative hogs. There's days I'm right and there's days I'm wrong because the market is so volatile, but we're getting close to our lows here. I suppose you got to be a little careful down here, but the price of hogs in China is what, 41% less than year on year.
Yep.
It looks like they've got enough hogs. We watched all summer long as these $15 isolines got poured into these finishing units that there's a million of around here where I live. And they don't give them away giveaway. They aren't priced that way if there's short supply, in my opinion. So, again, the fundamental part of me is kind of like going I think we got plenty of hogs here for a minute. Now, when we get on the backside of what we did see some sow liquidation, like say maybe into next summer, I'd have a little more enthusiasm. The next 90 days, I do not.
And let's talk about the grains here because we had higher weekly closes in both corn and soybeans last week. A lot of people want to know, are the harvest lows in, and can we take out $5 on corn and $13 resistance on beans?
I'd love to know if the lows are in too, actually. You're getting an opinion and it's a guess. If I knew anything, that would be something, wouldn't it? A few of us were disappointed when we attacked that $5 level again and couldn't quite pull it up. But yes, we were still higher for the week. We still have a formation that looks classically like a bottom in the corn. Big consolidation, inverted head and shoulders, yada, yada. Reports that didn't hurt us, at least. I guess I think it's a matter of time, but I would also preface it and say that I'm not somebody sitting here thinking you're going to run back to 630. I think we'll get through $5 in time, but the next step is 5.25 to 530, and I don't know if we've got enough gas in the tank to get through that. We're not going to run out of corn. Look at the carryout.
Yeah.
So unless you have a big pickup in demand, and we'll get an improved demand from the ethanol side, but I don't know, the exports don't look any better. You still got the river problems with an ability to float barge traffic down there. So there's still some issues. I think basis levels are not any runaway either. So bean deal I've struggled with a little bit more. The long term of that and the basic fundamentals of the bean market are better than in the corn, and yet
Absolutely.
The beans trade worse. Let's go with the idea that seasonally maybe we finally turn the thing and we get above $13 first, but probably above $13.17 to really confirm a bottom.
All right. Thanks for joining us, Brad Kooima with Kooima Kooima Varilek. That's Markets Now.